Well, something's happening in the markets that we have not seen for some time. In recent months, there's been a noticeable increase in merger acquisition activity from a number of companies around the world. Over the past several years, this type of activity has by and large been on hold, but no longer. For perspective on these questions, we turn to our very own Jim Russell, U.S. Bank Wealth Management Senior Equity Strategist, who is with Business Courier editor Rob Dahlmeyer for this morning's U.S. Bank Economic 360. Rob and Jim.
Thank you. As much as I'd like to keep talking about washing your hands in the bathroom, let's move on to something else.
An important topic.
Yeah, right. That's pretty important.
Yes, it is.
But how sustainable is this trend? Is this something you think will continue through the year?
Rob, we think the trend is pretty big. Every morning we get up and there's another large deal on the news tape, usually global, but to some extent local as well. Our very own GE is involved in a very large acquisition in France right now, and so we do think the trends are sustainable. Global deals are totaling $1.2 trillion, a Carl Sagan-like statistic. This is really in second place to 2007, where 1.4 trillion were in place by this point. One of the cool things is that we really think that this transition is occurring because of an increase in business confidence, and perhaps line of sight is a little better this year than it was years past. So we think that a couple of different things are going on, led by telecom, healthcare, and technology. I think we've all heard a little bit about some of the acquisitions by some of the healthcare companies. There's one pending right now with Pfizer, and technology, call it Facebook, and a few of the other things.
If I'm in the stock market, is this good news, or how should I react?
Yeah, this is one of the trends that perhaps is the most notable. There's a very meaningful change between the tone of this particular merger and acquisition cycle and what we've seen in the past, and that is the companies making the acquisitions are actually going higher in price regarding the stock market. You can see the chart here would indicate that over the last several months that the acquirers have actually outperformed the S&P 500 by a meaningful amount, 13%. And in past, perhaps the acquirers would actually go down in price. In fact, the statistics point to that on a year-to-date basis, the acquirers have gone up 4.4% on the very first day, which tells us that market participants are pretty excited about the strategic aspects and also the prices paid for these acquisition targets.
You touched on this, but why now? Why is this happening?
Yeah, again, CEO confidence is much higher than it has been for some time. Secondly, the composition of the acquisitions are key, and that is companies are using much less debt than they have in the past. We feel that this is a much healthier development. Cash and stock are being used. Companies, by and large, as a general statement, have large amounts of cash on the balance sheet. To some extent, they're buying growth as well. So CEO confidence, buying growth on a global scale, and again, investors being rewarded with higher prices by the acquisition activity. The markets seem to like this, and we do think it's sustainable through 2014 and 2015, assuming that the markets don't get derailed.
Yeah, this was something we saw a lot of before the recession. It just was a part of our normal life, and then it sort of drifted away. So this almost seems like a sign that maybe we're getting back to.
Yeah, picking up again, and again, we'll see it at all levels, big, small, and medium.
Great. Jim, thank you.
Thank you, sir.
Peg?
All right, thanks, Rob and Jim.